Okay, so without wasting much time, we'll start with GXY, but first we have to look at the fundamentals that are available for today. Looking at what we have, I think not much fundamental today, but let's check fxverify.com, or we could quickly look at Forex Factory as well. So looking at what we have today, this is are the important news to watch out for Canadian dollar. Employment change, participation in rate, and unemployment rate. I think this participation in rate has to do with voting for if there will be increase in Canada participation in rate. The Canadian participation in rate measures the population proportion of the working age population that is either employed or actively seeking employment, assessing the labor market engagement levels in the economy. It primarily focuses on workforce participation dynamics, indicating the rate at which Canadians are joining the labor market. Okay, this has to do with employment data. All right, so we'll be looking out for that too as well shortly. Let me try and see if I can mute everybody because I'm hearing some sounds in my background. Okay, so this is what we currently have for DXY. Remember the last time we did our market analysis, we projected that dollar will be weak up until this level, right? And as we can see that price has currently broken this trend. We expect a support to hold at this level here. We expect a support to hold at this level or slightly below it. You understand? But whatever happens, once there's a break above this level here, we'll move back to our bullish stance. Price is overall generally bullish, as you can see from the higher time frame. It's bullish, but we are waiting for a retracement that will keep price down to this level, which is at the critical zone of 61.8% Fibonacci retracement. While price is trying to do this, we've also projected correlated pairs with the DXY, such as Euro USD, which is one. Now, Euro USD currently from the last time we projected, price came down, it went up, swept liquidity again, and currently it's here. So if you are taking this trade, you should be at a profit of about 56 pips right now. 56 pips profit, looking at ending its bullish cuts at around this level. But remember, this is our TP1, this blue line, which is at 1.1472, and our TP2 is here, which is 1.15410. Not much fundamentals today. Moving forward, we have also GBP USD. It didn't trigger the last time we checked, but we were hoping that we would have a sell limit at this level here. So this will be the update for GBP USD. We're expecting the sell limit as dollar is currently weak, since we didn't get the price at that point here. So we're expecting to take the other setup, which is here. USD setup will also be coming up maybe next week. I don't think it's something we're going to achieve this week. The setup for this sell, for this move here. So this I'll post this as an update on the group chats right away. Moving forward, we also have Euro JPY. The last time we did analysis, and today is Tuesday. The banks are rounding off for the week, preparing for next week. Market manipulation is also very most popular, usually during end of week, end of month, and the likes of them. So for people that took the trade from here, We are still currently in profit. However, the other one we set day before yesterday for people to join like a re-entry is currently the SL. However, continued immediately after the SL down to this point. So if you are still on this trade, just keep holding. We see a strong JPY at least down to until this point. Yeah, we see a junk trade, but at least just for the moment down until that point. Yeah, so we just keep holding. Next is oil, crude oil. Those of us that took this crude oil trade um, from the very first day we did analysis, got a very good opportunity from here. Crude oil bruise onto this place. This is a lot of money. It's 0.1. I saw some people made 700, 1,000 plus dollars. I posted the trade when they shared it with me. So this is another entry again. Another opportunity is about to surface. You have another entry again. I think we might just be at a level where we need to readjust this. But if you look very well, you will see that buying from here is not bad as price has currently swept liquidity um, below yesterday's low. So it's actually not bad to say you want to buy from here. But if you check from Fibonacci series, we buy from the 61.8 critical zone. But around this place also we have a breaker that you can see market has reacted to a breaker. The last consolidation here between this point to this point here is the breaker. So buying from here is not bad. It's not bad at all. But I would say that you can make your stop loss tight. So we'll buy now. We'll be buying oil now, but we can make our stop loss tight or sufficient enough to hold a further drawdown. So market has currently cleared the Asian low and yesterday. So if you want to see that, let me open my session. This is my session window, as you can see. So this is for today from this blue mark here. Yeah, this is Asian low. So this is for today. This blue market. So market has currently swept liquidity and then return back into that place. Usually, this is a confirmation that our price is about to continue in that way, but you wait for price to come back to a either an inverse fair value gap or a fair value gap or another block before you place your entry. So we'll put our buy limit from around this place, which is long position from here. So from here, you can have a stop loss below this level, and then we have uh, we have TP at this level here. So TP at this level here. So now we have another update for crude oil trade. So buy at 72416. So we are buying immediately. This price drops further into this um, fair value gap. I think yeah, good. So I'll post this on the group now. So while I'm doing this posting, I don't know if there are any questions so far, maybe concerning the currencies or crude oil. I would pause my mic for the next 30 seconds so that you can ask not just questions. It's an interactive session. You might have a suggestion. You might have a different outlook as result to what we just said concerning these assets. So you can speak now. Yes. Good morning, sir. I can hear you. USD CHF. Okay, we'll do that soon. I'm having a problem with my WhatsApp. That's why I can't post the. But someone will help me do that. Uh, be sending it shortly. Pardon? Silver. All right. All right. Yes, we'll do silver. All right, so no questions, no suggestions, no addition. So let's quickly look at Euro, USD, CHF. You know, the dollar is still weak, but I think USD CHF is much more weaker. But just for today, we've just seen a retracement or something. But dollar was weak, and that's why we had this for the past 1, 2, 3. So everything is still playing with what we have with the DXY strength. Currently, um, USD CHF is currently on a serious bullish trend, breaking above highs of October 2025, currently at that high. And all these supply zones that we are looking at, they have all been mitigated, and that's why somehow they are not holding. You understand? They are all mitigated. And if you look at market currently is showing some sort of head and shoulder kind of pattern. Usually when we have this, right, we wait for price to break above the next neckline, and then we dive into it. So this would most likely be a serious one for the Switzerland franc, as markets will creep um, going to the upside. So currently, this retracement is supposed to maybe see an end at this level. Yeah. So I will not just be buying now. Still wait for price to sweep below this low. And sweeping below this low means can give us an opportunity at 61.8 here. Right. So if you go to the 4 hour, currently, price has currently established some sort of bearish movement in the 4 hour by making a market structure shift, a break below this level, and what seems like a sell for today alone. So a sell down to this level, sweeping liquidity below the double bottom that we have here. Then we can project a buy limit from this level. Yeah. So I would have said sell down to this list, but usually when you do this, it's you can see this is the last leg consolidation. If it was here now and price moved like this after making a structure shift, I'll say sell. But this usually this one sometimes this third impulse after like this first one can be anyhow. After this first was retracement, second impulse. This second impulse is the one you can still risk, because the risk usually is lower. Price sometimes will do 1, 2 before moving up, or do a third one that will sweep below liquidity, or not even get there, or just do half. But third leg usually can be anyhow. So it's not advisable to now say, oh, let's sell down to this point. But it's safer to say wait for price to come here. And if price doesn't come here, breaks above this, right? Price breaks above this here. So if price doesn't get to this last level and it breaks above this level here, we'll just look for an opportunity to buy from the neckline. I think this area is the neckline area. Look for opportunity to buy from here, and then we'll join. So currently, safest bet is buying from this point here. So I'll map out this level as long position. We'll have buy limit at around there. Where price come into this um, base there, or like an order block there, or you can call it the breaker. So from that level here, we expect price to come down a bit and continue movement up. So this just signal that this is expected to be bearish for today, but it is not a high probability trade, and that's why we are not saying let's sell now and then let's buy later. So because it's not a high probability trade, we'll rather wait for price. So I hope the person that asked for this is satisfied or okay. All right, welcome, sir. Okay, great. So we are in sync. Now let's quickly go to silver. Silver is 95% correlated with gold most of the time. They move in the same direction. So if I show you gold, you feel silver. If I show you silver, you see gold. So let me just quickly show you what silver is currently doing, and then see what gold is also currently doing on the same time frame. So you see that both of them are highly correlated. So gold has gotten to a support level. We are looking to buy. I missed an opportunity here this morning. I was about to sell, but I was waiting for it to come back to this particular level in the smaller time frame. Then I missed it. I wanted to enter from here, but I feel like it's too short. So suppose that price has already gone down. I think it's about 150 pips from this level. Okay, 138 pips from this level. So waiting for price to get into the support level before we buy. So silver too. But on a bigger scale, let's just quickly see what if they are even going in the same direction. All right, so this is the daily time frame for silver, and you see price is still on a downtrend currently. And why I'm looking for a buy there is because market is consolidating. Usually after impulse, you see consolidation. Imagine after this move, price went up two and then third leg before it started falling again. We have another impulse move. Our price did one, it did two, and it did three, and then we have another impulse move from here again. However, this one doesn't like seem like a okay. This is not a good retracement, so we'll just call it noise, right? This seems like a good retracement anyway. So that's it. The consolidation ended here with just maybe first leg, second leg, and then market went down. So this is just the first leg of this impulse now, and we're expecting maybe second leg and even a third one. But why we are expecting that, usually what would influence that is markets coming back to reclaim levels that probably are unfilled, like fair value gaps and the likes of them. So if you look currently, there is not much fair value gap. Like I can't really see any reason why markets will be coming back to reclaim any level. But if you go to the smaller time frame, like the 4 hour, you might be seeing some opportunities there, like gaps and the likes of them. These are levels I believe markets will come to reclaim before going. So that's why I believe that market is coming back up, trying to make another bullish stance here. However, what will keep us or guide us is that at this level, even when we see market get to our supports, like I printed for gold, we will not just be taking the opportunity. So it is the idea of gold I'm using to analyze this one. The same thing, because it's just doing exactly the same thing, most exactly the same thing. So I'm looking at a buy opportunity at this level here for silver. Put long position here down onto this point here. So this fair value gap that pushed market up is kind of strong actually for silver, but for gold it's different. It's kind of different, and that's why I say that maybe sometimes if gold is going down, silver will just follow the same things. If it's going up, both of them they are more correlated. For for gold, we have the one that coincide with an order block here. So there's a fair value gap here that actually coincide with an order block at that level. Yeah, and then this one is kind of large, and that's why probably push markets up a bit, but you see market coming down. So markets trying to come down here, we make usually after an impulse, we make like a three leg consolidation like this. The same thing we are also expecting for gold markets. But if market come into this place, even with the second leg consolidation, we'll still take the buy. However, we'll be following it cautiously with a trailing stop loss because it is not a third level. And usually, if it makes two, sometimes it's enough for it to push price up because price has already cleared liquidity below that level. So for gold, so this is what I'm looking out for. A sweep below this level, actually, a sweep below this level. Um, Below this, this is low of I think on Thursday during New York session, price made this low. So it's still below this level into these gaps that we have here that coincide with this one here and this one here. So we have something like this. This so just trying to be more careful with silver. But for gold, I don't think it is this deep. But silver is giving me an option to wait down onto this level. So a sweep below this level will give me an opportunity to keep buying. Price is still within that level layer of consolidation, and I have a buy limit here. So for gold, let me just do gold so you understand better. Now for gold, it's almost the same thing, right? You see the but where we have the fair value gap are quite different. For gold, we have it somewhere around there. It already coincides, not as far as what we have for silver. So price are just touched down that level. Now, if you go to the smaller level where you probably see a clearer move for first drop, second, and then we have price maybe making the third drop. So if price probably comes and give me another opportunity to enter again from here, I'll enter a sell other than a buy. But it is, I said the third layer is usually the most riskiest because if you enter, sometimes prices will just keep going in that direction. So usually third level consolidation is very risky to trade against the current trend. So the current trend we currently have here is bullish, as you can see from a smaller time frame, but the overall is actually bearish. So we're already having a bullish trend established. This is price breaking structures above. So we want one more, something that will get to at least this level here. So if you look at gold has already made, silver just made just one, hasn't done the second one. So gold has made one, this is two, and we expect the third one to just sweep liquidity above this level and get to this point here. So we're expecting the third one, and we are looking at it coming to this gap before. This gap didn't push price back up. Usually when market gets to a gap, it is a level of either support and resistance. So we look at price coming back into this level, maybe at this time it will be pushed down by this gap. But from here, we'll start looking for an opportunity to sell gold, like on a bigger time frame. So going back to the 1 hour, so we are still expecting price to consolidate again, maybe in the smaller time frame, do something like 1 2 3 like that in the smaller time frame, and probably give us a last impulse into this level, and then we can look for a buy opportunity. So for now, I'm not doing anything for good, but I'm eyeing this level here. So this level will now be something like if price keeps going up, it will be something like a double bottom. You understand? And usually, if you have those levels, swing low, swing highs, double bottom, the areas where others are resting. So areas of resting liquidity. So you can see enough market gaps here. So price will later come to reclaim this level, and when price does, it will give you a confirmation here. So different confirmation people use. For me, sometimes candlestick, three inside up, three inside down, pin bar and the rest of them. But I advise usually look for them on anything on a 1 hour time frame to make sense, other than using them uh, on a small time frame. If you check very well now, you see this bullish, bearish engulfing happened on a 1 hour time frame, and then you see price went back into that level before it started dropping down. So usually, if you're expecting price to do something on the 1 hour, you want to use candlestick, use the higher time frame. But if you are a smart money trader, or let's say SMCICT, usually you look for a market structure shift at around here on a smaller time frame, like 15 minutes or 5 minutes, or you look for a change in state of delivery, something like this. Different things, right? Different things. You will look for a nested FVG, fair value gap, and the likes. But usually, I like to go with the market structure shifts on a smaller time frame, as at least even if it is on 5 minutes, to just confirm that price is about to change before it will happen on a bigger time frame. On a smaller time frame, it will have already taken place. So currently I will have my, for those of us that just used to trade without all this SMC, we just use Fibonacci or we trade straight. Some of us would have, okay, see, just measured the swing from this level up onto this level, and then waiting for a buy opportunity at this level here. But the difference between this one and this one is that some of us might miss it today. Not every time price gets to 618. And if you look at this old trade, you'll find out that you already have something like another block at this level, and also the level of the Fibonacci that coincide with your other block and the likes too is also very strong. So sometimes even when you want to pick 618, you pick it for some reasons that, okay, it aligns with a fair value gap, or it aligns with another block, or it aligns. But at this point now, the 50% also does that here. So buy limits to be advisable here up until this level, where we expect a sweep above this. So we will not be going that far above. So since we're expecting a sweep above, so we'll put at the same high. And so the entry for this is 4081, 4081, and risk reward is 4.91. So you can see how, since the risk reward is 4.91, you can see how um 4143 as TP1, and 4202 as TP2. So I'll post this for gold and the other one for silver on the group chat now. So do we still have questions, or this one is okay? So while we are waiting for questions, let's quickly talk about BTC. BTC has resumed its bullish trend again. if you look at what is currently going on, you will see that first market made this low, then market swept liquidity below this low, and ever since that sweep, market has made consistent highs. Now, if you go to the smaller time frame, what I'm saying will make more sense. So we are expecting the market will get to this level, but it didn't, at least to reclaim this level, because all this one, since market did not make a full break on daily time frame, we didn't see it as, although there is a market structure shift kind of, but we didn't see it as something that would all these levels will be enough for it to propel it back up again. So what we're expecting is the market will come down to this level here. However, we missed it, so we might just have to join halfway. So if you look at what is currently going on here, on the smaller time frame, market has made sufficient break of structure multiple. And when market does like 1, 2, 3, or at least 1, 2, you know that a market structure shift has occurred or change of character, and then you would want to take price from the next level. And the next level was around here. Price got to this level here. So if you check with your Fibonacci, I think that is around 50% Fibonacci retracement, slightly almost at that level, almost at that level. But price did not at least drop at that level. But I believe something must have also influenced it. Just like I said, all these levels are not just levels we just pick blindly. There are things that support it. And if you look at this 51, there's a steady base here that supports the level. It's a very strong steady base order block that supports this level. And then price has come to fill the gaps here. This point to this point is a market gap actually. It has come to fill the gap. And I don't think price is coming back down anytime soon. So I think we missed this for BTC. So we'll look for another opportunity to take BTC again. So if you look at what we currently have here, I think the best thing is to just wait for a break above this high again and then a retracement before we can take BTC, because it is not usually advisable to buy from the top. Rather, professional traders always buy the dip. So buying from here, you can be favored, but it's not really a good trait of a professional trader to buy from the top when price has already traveled. Now it's okay to wait for price to come down to another level, and the level that I will propose is first this level here. But I know that when price makes another swing high, we'll be able to measure and see where this aligns with. If it aligns with our 618 0.5 Fibonacci retracement, then we'll be taking the trade with more confidence. So at the moment, I will say for BTC is a missed trade. We'll wait for an opportunity for price to pull back after breaking this high. If it breaks this high, right? If price is able to break this high to give us a much more stronger, much more stronger confluence. Like a lot of things will be agreeing together. So, if it doesn't break this high, we might be looking at this sweep below this level before we buy. But let's wait for price to break the high and then we'll take that trade. So that's for that. I think we have come to the end of today's market analysis session. I don't know if we have any questions, but if there are no questions, like in the next 30 seconds, we'll call it a day and close the um, video call. All right, bye.